Hello guys, welcome back to another weekly market breakdown. Now today I'll give you guys the usual rundown. We're going to take a look at the dollar index, Euro USD, the Nasdaq, as well as gold and the German 30, also known as DXY 30 from a technical and a fundamental perspective. If you're new here, please head over to the educational section. Go and have a look at some of the educational content in terms of the fundamental data that we will be speaking about here today, so that you can understand also how it works. Now, without any further ado, good friends, let's jump straight into the information. Now, things are going kind of crazy in the market at the moment. Because why? Everyone thinks that because the dollar index has been bearish, everyone think all of 2022's problems is just going to disappear, but that is not the case, and we're going to dive into some of the information. But before we do that, it's important to understand what kind of data we have coming through this week, and then obviously what data we had through last week. So as we could obviously see, last week was a bloodbath for the dollar index in terms of fundamental data. And if you look at the technical side, you'll see the dollar index is really not bothered by the information, because if you can see here from a daily perspective, the dollar index is still basically trending sideways, still no clear direction, as the Fed is now awaiting the interest rate decision. It doesn't necessarily mean that the market's not going to move next week. I still feel that we are still going to see some sideways movement, because why? There's no investors don't know which way they have to go with the dollar index, and the dollar index is also now holding on to life support. But we are going to talk about two high probability setups that you can potentially make use of. Now, we know that we've got the flash PMI, purchasing manager index. Again, if you need to know how this works, what it is, head over to the educational section on the channel and be sure to check that out as well. The advanced GDP and then the core PCE index there as well. That's all we got for next week. And then the week thereafter, that's kind of when the juicy stuff is coming through. So that's what we are going to be looking out for this week. Then we not too much to worry about this week. Next week, the week thereafter, definitely some ground-shaking things for the dollar index. Now, let's jump straight into this article by CNBC. It says here, China has confirmed that the outbreak has infected 80% of their population. Do you know how many people there is in China, my good friends? Go and Google it and find out how much 80% of that is. It says here, the possibility of a big COVID-19 rebound in China over the next 2 or 3 months is remote as 80% of people have been infected. China has passed the peak of COVID patients in fever clinics, emergency rooms with critical conditions, a National Health Commission official said on Thursday. This is a problem. Again, you think you pass one thing, and then all of a sudden, China's like, China was like, guys, it's like when you play hot potatoes hot, so you pass it on. So China got it first. I was like, guys, let's give it to USA. USA was like, let's give, and then they started passing it on. So the last country, guys, like China, it's back to you again, because now China is again the only country sitting with this problem, because now all of a sudden they have it back again. Does this mean the potato will be passed on again? And could we potentially see another outbreak happening as we saw it in 2020? Well, nobody knows. In other news, Google lay off 12,000 people. That's all you need to know. And Microsoft has laid off 10,000 people. Now, we know this because last year in Feb, Powell had said that due to based off these interest rate decisions that was going to take place last year, obviously a lot of people is going to lose their jobs. He had stated that as they try to recover or bring the economy back to where it's supposed to be, or try to bring back inflation to where the Fed is expecting it to be, people are going to lose their jobs. And we can see that now. It says here, it comes after Amazon and Microsoft laid off a combined 28,000 people. Microsoft laid off 10,000. That means Amazon had laid off 18,000 people. What does these companies have in common? something I've always said. What does these companies have in common? They are all listed on the Nasdaq 100, all of them. And this is what I was saying in all of the videos, that when this happens, the Nasdaq tend to take a dip in the price. Now the question is that going to go over into other countries also? Can we expect that to come through to us also? In South Africa, we have problems. We have power Eskom problems, which is electricity problems. We have salary problems. We have job problems. We have problems of the problems of the problems. Also, now anticipating that fuel could potentially increase as of next month. So what now? So this is basically where we are now. Next up, Fed Governor Waller backs a quarter-based interest rate hike. He says that the Fed's more likely to hike interest rates by 0.25. Now, it says here, the Federal Reserve Governor Christopher said Friday he favors. Now, we don't care what you favor. We want to know what it's actually going to be. But he says he favors a quarter percentage point interest rate increase at the next meeting as you wait for more evidence that inflation is heading in the right direction. Now, just when you think everything is going to go the way, just when the market thinks, let me just say the market, but just when you think everything is about to come right, then something's probably going to happen that's going to throw everyone off guard once again. But like Christopher says here, we'll have to wait for more evidence that the inflation is heading into the right direction. And the only way for that to happen is look at the PMIs when it comes through, and then we obviously need to wait for the next CPI data that gets released on the 14th of February there as well. Now, we've got the fundamental data covered out of the way. Basically, we need to still be on the lookout for the dollar breakout. As long as the dollar is going to consolidate, everything else is just going to move sideways. As with everything else are correlated with the index. So Euro USD is traded against the dollar index. So what you have here is that everything that we are going to be looking at is going to be a sideways moving market. But that's because here also it's going up nicely, but you'll see what happens next week. You know, you can't make people lose their jobs. So here we've got a sideways moving market, and not the German 30 index is included there because those are German stocks. But you can see Euro USD sideways, DXY. There's going to be another update that's going to come sometime this week as soon as we got some of the data available also. But I have included the German 30 also because, the last breakdown that I did on it went exactly as anticipated. But I'm going to go straight onto the daily time frame. So we need to obviously wait because the dollar index is now holding on to, very strong support. Now, the only way for the dollar to continue lower and come to this level over here is we need a clear monthly break below this level. Alternatively, even a clear daily break below this level would be good to see. But we're going to mark this level of support as a very important structural level. We're going to dive straight onto the daily time frame. Now, you can see we had a massive liquidity run here all the way to the downside with this candle here. Okay, right all the way till there. Okay, so the market actually went and go and test that level. However, the market tested it and rejected it. Now, the market is basically on its way back there once again. So we're going to use this level as support, and this is going to be our level of resistance. Now, we obviously need to wait for a clear break on either levels. If we do get a pullback, if we do get a break to the upside, I do expect the market to pull back to at least the 0.32 of the Fibonacci, taking on this monthly bearish impulse. And obviously to the downside, that would be the downside target. Now, if you do get a clear daily break and close below this level, then I do anticipate this market to continue lower. Any move to the upside, if you do get a clear daily break to the upside, then I do expect the market to go and hit that level over there as well. Again, it's very important to monitor the price action as we go through this week, because only then will we be able to know whether we're going up or whether we're going down. I'll be lying if I sit here and tell you that we're going up, we're going down, because why? Even with news events that was released, the dollar index is still just leaning at the bottom and not giving us anything. Euro USD also a massive correction is due on here, and yeah, I believe that this is why I believe a correction for the dollar index to the 0.382 of the Fibonacci taken on the monthly impulse, because the market made this massive impulse. Now after an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, again, a 0.382 pullback for me would be very good to see on the Euro USD before any potential continuations to the upside. So I will stick to this bias on Euro USD. However, it is important that if we do get any clear daily breaks and closes above this level, it could potentially be higher. And that is why as traders, we always have to be reactive and not predictive, and always learn as the market adapts, because that's how people, that trades high impact news like the CPI would go on about this. Nobody knows which way the market's going to go. People will only take screenshots and put it on their Instagram if they were right, but if they were wrong, then they're not going to put it there for the whole world to see. So we're not here to gamble with our hard-earned money. It is okay if you're a very famous comedian like Trevor Noah, and you have people with the same names or surnames as you that trades. So it's okay for you to gamble. I mean, you've made enough money making people believe that they can make the same kind of money that you do. So it's okay for you to gamble, but you can't expect someone with 100 Rand to gamble there as well. So just be very careful when you go and sell it from that level. We need some proper confirmation from that level before making trading decisions on there as well. Next up, we have the Nasdaq 100. The Nasdaq also isn't doing much. You can see here we have a wick to that level there. And I always say you have to take wicks into considerations, because these are levels that the market had gone to visit once. So we do take that into consideration as well. And this was a completion. If you remember, I spoke about this in the last breakdown. We had the market that printed this overextended W formation. After an overextended W formation, you normally expect to pull back to the left leg before a continuation to the upside. Now, we have potential clearance over here, but the only way we're going to see that clearance is if DXY move further lower. So I'm not going to anticipate that. I'm going to use the same scenario that I did with the dollar index and move it towards this side. Because why? You don't want any surprises, like scrolling through Instagram and then all of a sudden you see this Nigerian scammer that used to be on Empire, or that is on Empire. So what you want to do is you want to make sure that there's no surprises, right? Like you don't want to get surprises. So just make sure that, that we know which way the market's going to go. So what we do want to wait for is then a clear break above that level on the retest. Definitely start looking for that continuation to the upside. Or what you would have expected over here was a move to the downside. Now, I would love to see a move to the downside, as this will continue, but it doesn't matter what I love as well. It really doesn't matter. I can love Bugattis, but it doesn't mean I can get one, or I can always pretend that I have one. I'm just joking. I don't have one. Can't afford one. Anyways, same scenario here for gold. Gold still has some clearance to the downside, and I would really, really very much love to see gold clear. But the good thing about gold is the price action is slightly different. As we see here, gold had printed resistance, broken above resistance, came back to test it as support. In order for us to look for sells, we need a clear break below that level of resistance that got broken. That was now turned support. Support needs to break, and then support gets broken. It would then become resistance. And then on that retest, we would then start looking for selling opportunities to the downside as well. In doing so, the market also print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Santon Sneyman, SIK, not done. So again, 730 still remains the same. I expect the market to complete this overextended W formation as we identified on the Nasdaq here as well from a daily perspective. If you look here, so we had the market complete and we have a potential overextended W formation from a monthly perspective. So I do expect a pullback to this level over here. It's just that the market would never just go and correct itself, because one of the reasons is that traders get in at these levels, so the market first want to grab as much as liquidity as it can. So we've broken below support, testing it as a resistance, so I do anticipate the market to go and test that level and then continue that move to the downside. Now guys, that is it from my side. Have a beautiful Saturday. Thank you for your time, and as always, cheers for the ears.